my colleague Ajay Sharma caught up with the MD and CEO of Mahindra Manulife, Ashutosh Bishnoi, and spoke with him about the recovery ahead, the pillars of growth as well as the opportunities that we can see in the mutual fund industry. Ashutosh Bishnoi also shared the outlook on the synergies between Mahindra and Manulife and their latest focused equity fund. Listen in.
Hello and welcome. We are having this special chat on ET Now with Ashutosh Bishnoi, MD and CEO of Mahindra Manulife Asset Management here in India. And Mr. Bishnoi, thank you very much for your time. Before I come to the fund and the new things which you're doing there with your new offerings, just a quick word on how you're really assessing the economy right now. Because, you guys have got Mahindra's, backing. You have such amazing reach into the countries, smaller towns, rural areas. You have a very good grip on the economy. So just wanted to understand how you are really looking at the recovery which people are talking about. Some are saying patchy, some are saying weak, others are calling it strong. What are your thoughts?
Thank you, Ajay, for having me. Like you said, we get a lot of information from the ground up. Okay, we are working in many locations. So here is our take. Where the growth is concerned, I think it is a fair assessment we have that growth has bottomed out. यानी इससे नीचे नहीं जाएंगे. We will not go below this level in terms of degrowth of the economy, which was induced essentially by the fear of the lockdown and the pandemic, and the slow opening up in different parts of the country, re-lockdowns, etc., which caused a lot of disruption in manufacturing and services. The good news always was that the rural economy stayed very strong. If you actually went into any village in those times, or even now, you would not even sense that there is any kind of a lockdown or a pandemic. The growth has been excellent over there. So we are seeing three key pillars of growth coming from here. We are rising from the bottom. There is a fresh spurt, which should be expected when people have been locked down for 7, 8, 9 months. Then all the latent demand is going to catch up. We are seeing that as we speak. There is a fair spurt in what we call consumer discretionary space, which goes beyond the ordinary things. It goes beyond automotive, for example, into household appliances, into home improvements, into electronic appliances, phones, the whole 9 yards of people wanting to feel better. In fact, some of the sectors that might surprise us by spurt in growth might even be leisure and travel. And people don't expect that to happen, but we are seeing green shoots in that. We are seeing that in order to feel more normal, people want to go out of the way to do those things as they would have done at this time of the year, which includes travel, which includes, going out. And in fact, there have been situations in large cities, people have taken their family and gone and stayed in a hotel just so that they feel like a sense of vacation. So there is a spurt. Of course, the spurt may sort of stabilize. It may not be at the same level of spurt after the initial burst. But even so, that's a kickstart. We expect some of that to continue. There is consumption beyond staples. The second piece, which we think is going to come from this consumption push, is going to be a sectoral growth in the cyclicals, the metals, the industrial products, the intermediates. Already we are seeing that moving, and I'll come back to that in a minute. Then there is a whole leg which is opening up, which is up to us as an economy to grab with both hands. We know with our scanning of the world economy and the manufacturing situation across the world that all the global major manufacturers are looking for a China plus one strategy to execute on. This is a direct result of the pandemic. They no longer want to get only rooted in one place. They want more than one place. And clearly, India is extremely well positioned as an economy to be that second place. Of course, there are others who are fighting in competition with India for that. But I think in terms of a cost of labor, the cost of goods, the benefits that the government is giving by way of manufacturing incentives, tax cuts for manufacturing, some of the tariff barriers, all these will come well into play so that we can pitch hard for the China plus one. And that's not coming from domestic demand. And the third leg, we believe, which is going to be extremely sharp, is going to be the digital divide is going to get closed. The digital divide is the penetration of smartphones is small, penetration of internet is huge. And we've realized due to the pandemic that we can all live with the digital e-commerce. All of us, no matter what age, where we are. And that divide will get really closed very fast, and we see that sharply moving up. And therefore, we think the economy over the next 12 to 18 months is in for a surge. That's how we are seeing the economy coming back.
Ashutosh, the Indian mutual fund industry is almost 25 years old and always struggled for penetration. But in the last couple of months, the sense we are getting is that curiosity, inquisitiveness for people in tier 2, tier 3, they are more aware now financially, and of course digital reach is there. Their interest level for the markets is improving. Even some of the data points from brokerages also seem to be indicating. Are you also witnessing from your own industry point of view and the fund point of view flows from beyond metro cities? People are joining the mutual fund industry and wanting to become long-term investors?
Yes, Ajay, actually there is this whole opportunity that's opening up very fast for mutual funds, and very well supported by regulation. In fact, there's a lot of incentive to go into smaller markets. And we, for example, as a brand, take full advantage of this, going into beyond 30 cities and making a large market out of it. But there are many other brands. But there are two questions to be answered for anybody who wants to do that from a supply side. Number one is, do you have the right product? If you see what we've been through over the last 1 year or so, I think the demand there are two types of investment demands we are seeing. Number one is those people who believe that this is an opportunity to make some extra money because the economy is going to turn around, and whatever I may have lost in my previous equity investments, I must make up. So there is a lot of those people who've actually gone directly to brokerages and open accounts. That's always good news for mutual funds, because if somebody gets a flavor of playing with equity and learning its risks, he will definitely come to mutual funds to temper that risk and take a diversified approach. That is one. The second part is the reach. Now, that's where we have a challenge to overcome as a fund industry. I think we reach very well in about 100 to 150 cities. Beyond that, I think we have a challenge. The challenge is we have to find distributors who will be able to take us to customers. And so long as distributors do not find it remunerative to go into smaller cities, this is going to be difficult. Yes, technology will hopefully bridge the divide. And everybody, all of us, all 45 of us are trying very hard to see that technology bridges the divide. And given the experience with e-commerce that people have had, hopefully the answer will lie there. So these are the two challenges: understanding the customer's need and creating a product, and getting the digital divide conquered. We believe there's a huge market out there for formalized investments like mutual funds. And of course, we have a huge campaign going on, that's reaching everybody. It's not differentiating, and it's in every language. So people are aware. The gap between aware and availability is where we are now all working hard to bridge that gap.
Right. Ashutosh, Mahindra Mutual Fund, already a big brand, very reliable. When really one talks about Mahindra Mutual Fund or Mahindra, any company, the one word which comes to mind is reliability. And after Manulife coming together, the brand of yours have only become heftier, because now you have a global partner, deeper reach, and a brand which has actually seen cycles in capital markets over a century. So now you guys have been together for 6 months now. How are things panning out? What new on your drawing board? What's happening? Give us a flavor.
Thanks, Ajay. I think, yes, you're absolutely right. Mahindra is a very, very trustworthy brand in India, as is Manulife in the investment world and across the world. They haven't been in India, but for example, they've been in Asia Pacific for more than 100 years, right? So what do they bring to this partnership? is essentially a strong foundation to lay on managing the money itself. So that's their expertise. Mahindra is a company which is well known. People are drawn to it. They're familiar. And it's up to us to use this partnership to come out with product ideas, with performance in returns to offer to the customers. And that's where Manulife plays a role. So over the last 6 months or so, we've engaged very sharply in investing in creating a bridge of sorts between Manulife and Mahindra, where we get to start implementing those processes in investment management and product management, which they have honed over 150 years. There's a process, for example, they call it the GCMV process. It's simply growth, cash flow, management, quality, and valuation. That's a process they follow for selection of securities that will go into an equity portfolio, for example. Now, while it sounds simple, it's not easy to do. It's fairly many layered sort of a process. Over the last 6 months, our entire equity team has been deeply engaged in understanding and implementing this and seeing the results come out in our products. Also, there is a whole slew of products that we are now working on with them. Some of them are going to be quite interesting and innovative. For example, Manulife actually is not just a very large asset manager in equities and debt space. They're a very large manager of physical assets in the world. They manage, farmland, they manage timberland, they manage real estate. And we are actually thinking hard to say that, Indians have the same obsession with physical assets. What is it that we can do by way of a financial asset that represents some of these classes of assets? Can we create a product together which addresses uniquely an Indian mindset for need for income or return coming out of underlying physical assets that comes to you through a financial security? Those kind of discussions are happening, and hopefully we will be able to come out with products over a period of time that will be unique and that will be very apt for the Indian consumer, particularly in the smaller markets. So that's the kind of work that we are doing together, Ajay.
Ashutosh, talk to us about this new focus fund category and what you're also planning and launching a focus fund NFO as well. Talk about the strategy behind this.
Thank you, Ajay. I think focus funds have been around in the SEBI categorization of schemes. It is one of the equity funds. And it's a unique fund, actually. If you think about it, it can only invest between 20 and 30 equity stocks. That's the main driving feature. You cannot go above 30 stocks. So it's a sort of a concentrated portfolio, if you like. And therefore, it has to come from very strong conviction that this particular portfolio will do well for the investor. And therefore, it stands to reason that a fund like this should ideally be managed by somebody who has a lot of experience in this market. And so, rightly speaking, we said to our CIO equities, which is Krishna Sangvi, that you alone should manage this because you have worked in this market for 25 years. You know where to find returns. And the big advantage with focus funds is there's no stopping us to where they can go in the market. There is no limitation on which market cap, how much, which stock type, size, type, sector, nothing. So it's a go anywhere fund. And that's the advantage. Of course, it's to be handled carefully because this advantage could easily become a disadvantage. But we've seen some of the better focus funds over the last 3 years or so. I think the performance, generally we have seen it hover somewhere between 100 to 200 basis points above their diversified equity counterparts. And that's a pretty large gap if you accumulate it over 3 to 5 years. That's a very healthy extra opportunity that investors can play in. Of course, it has to be very carefully managed. The risk tends to be slightly higher, of course, because you have a smaller portfolio, and therefore every element in the portfolio could have an impact on the NAV if it doesn't do well. Also, this kind of fund requires very hands-on, very aggressive sort of a handling because the moment you have the upside and the valuation and you've got it, you probably need to move out of that stock and find the next one, which is going to offer you the next upside. Otherwise, you may not end up with a higher alpha that you're promising. So it's a little more aggressively traded, if you like, as a fund by and large. I'm not saying it's like, trade every day, but it is not the kind of fund you will buy something and hold for 5 years. Typically, you will hold, 2 years, maybe less slightly. That's the kind of fund this is. We are looking at it now because we think the opportunity to invest in all the sectors I spoke about, which will drive the turnaround of the economy, we are seeing very, very cheap valuations in some of the sectors. And we think, the market is ready for a fund like this. So that's the kind of fund that we are looking at coming with. It's called the Mahindra Manulife Focus Equity YOJANA.
All right, Ashutosh, we'll let you go on that one. Thanks so much for joining us and good luck for the fund going forward.